Well, what if lowering interest rates as a way to spur investment in the economy could actually lead to more job loss? I haven't heard anyone say that, right? So maybe I'm missing something. You guys can let me know what I'm missing, what I'm not thinking about. But in my mind, if what companies are doing right now is taking their money and investing into AI, then couldn't lowering interest rates actually increase the amount of investment that these companies are making into AI and not into people? Government will release September jobs report next week, ending the data drought from the federal shutdown. So the Labor Department will release its numbers on September hiring and unemployment next Thursday, a month and a half late, marking the beginning of the end of a data drought caused by the 43-day federal government shutdown. Now, they had to break the record. They really had to do that. That was a part of just a mandate. You know, we had to create the longest shutdown in government history, and then we come to an agreement just to make history. So, anyways, um, so this economic data coming in is going to be a really big deal because right now everyone's shooting in the dark. As Jerome Powell said at the last Fed meeting, you know, what do you do when you're driving in the fog? You slow down. And so the Fed hasn't known exactly what they're going to do with rates. Speaking on that, let's look at what's happening on the Fed Watch tool. So the Fed Watch tool is from the CME, the Chicago Mercantile Exchange, and the idea is trying to get an idea of what is going to happen at these FOMC, the Federal Open Market Committee meetings. Are we going to get a cut in rates? And this is based upon the actual market itself, right? These are traders actually betting on whether or not we will get a rate cut at, for instance, this December 10th meeting. Now, as it stands, right, this has been changing over time. We had we've had it go from the like. So first off, you can see up here the current target rate is 375 to 400. Okay, so that's the current target rate for the federal funds rate in the United States. Now, there's now a 55.6% chance that that rate is going to stay the same after the December 10th meeting versus a 44% chance that we actually get a 25 basis point cut. Basis points are 1/100th. One basis point is 1/100th of a percent. Now, when we look at how this has changed over time based on over here, we can see that right now, the chance of a 25 basis point cut is 44.4%, whereas yesterday it was at 50%. And then a week ago, it was at 67%. And a month ago, it was a 94% chance that we were going to get another 25 basis point cut in the December meeting. So as it stands, right, we've actually been getting to where it's less likely that we're going to get a cut in the federal funds rate. Now, why is that the case, right? That's the real question. Why is it likely that we are going to keep rates the same? Stephen Myron, I believe is what we're saying his name is, has come into the Fed, and the idea being that he potentially wants to get rates lowered. Now, what I've heard is that something around Trump saying, oh, maybe we don't actually need rates that much lower anymore. Maybe we actually can just keep them the same. Thing is if you keep cutting rates and the economy is not as bad as we think it is, right? So we don't really have the unemployment data, so we don't know for sure what's going on. But if you cut rates and the economy is not doing all that bad, then what can happen is we can spark inflation back up again. And if we get inflation coming back up again, then all of this effort that they put in by trying to lower rates is actually going to put us in a way, way, way worse position. Okay. So what the government and the Federal Reserve, rather, excuse me, is trying to manage here, what they're trying to balance here is making sure that if they lower rates, it doesn't lead to inflation. But at the same time, we've got a ton of job loss that we saw earlier this year. And the point of obviously lowering rates is to get businesses to borrow more money and spur investment and put that money into the economy, hiring people. Well, what if lowering interest rates as a way to spur investment in the economy could actually lead to more job loss? I haven't heard anyone say that, right? So maybe I'm missing something. You guys can let me know what I'm missing, what I'm not thinking about. But in my mind, if what companies are doing right now is taking their money and investing into AI, then couldn't lowering interest rates actually increase the amount of investment that these companies are making into AI and not into people, right? That to me sounds like what could be happening. And now it's like, okay, wait a minute, wait, whoa, whoa, whoa. Do not lower rates too fast, because if we lower rates too fast, then we're actually going to potentially make this unemployment problem even worse than what it is, right? Maybe not in the short term, but over the next 2 or 3 years, right? Because that's all that's all this current administration is really worried about, right? They just want to make sure that they get the next 2 to 3 years right, so that by the time they're done, everybody's like, yes, you did a great job. You got the best records on stat ever, right? And this is not a current administration specific thing. This is something that goes on for every cycle that we have, okay? But I just wanted to think about that real quick. What do you guys think about that? Is that a crazy idea that lowering interest rates to spur investment into the economy could actually accelerate the unemployment getting higher? Because these companies take that money and they don't just invest it into hiring new people, but instead they invest it into AI. Maybe I'm crazy. Maybe I'm missing something. You guys let me know. If you enjoyed this, then you would absolutely love my show with Ben Levitt called Memes and Markets. We go live every Tuesday and Thursday at 12 p.m. Eastern, where we go into topics like this more in depth and in real time. Click the link in the description to subscribe to Memes and Markets, and I will see you over there on Tuesday and Thursday at 12 p.m. Eastern.